Hello, my name's Ethan. Make sure to check out my website, ethanwrenn.com. From there, you can find links to all my various socials. We're currently live on Twitch, YouTube, Kick, Twitter, and Facebook simultaneously. So wherever it is you might be watching this, make sure to follow and subscribe if you'd like to let me know if you guys would like to be notified when I go live next. On my website, I have a blog. As you can see, I'm continually updating it with new content. We cover topics such as finance, the history of companies we cover here on this channel, gaming, emulation. There's bound to be something that you find interesting, so make sure to go check that out. Every blog post has its own unique video that coincides with the content. At the bottom of every page, you're even able to leave a comment and let me know what you guys thought, how I could improve potentially, so definitely check that out. On my YouTube channel, I'd really appreciate if you guys go subscribe. A lot of the content we cover here on the streams gets turned into YouTube videos and is available via YouTube. We have over 806 videos now. That's a lot of content to go through. If you guys go to my YouTube channel, click on playlists at the top, you're able to see a bunch of different playlists I've made that better organizes the plethora of content we have, whether you're looking for ETF videos, commodities videos, crypto videos, it's all there. So I highly recommend going and looking at that. The next product we're going to be looking at is symbol AMAT. We made this video 1 year ago, September 21, 2022. So a little over a year ago now. This kind of coincides with the SMH video that we just made in this stream. Definitely go watch that. It'll be available on YouTube. And again, tech has outperformed extremely well throughout 2023. 2023 was a great year for equities in general. So let's see what I was saying about applied materials. Again, in September 21, 2022. Okay, for all of you who are new, just in chronological order as we've been sharing them, right? So we just covered Citibank. Ooh, we'll get to that one. I actually did AMAT first. We're going to do AMAT first. So what is AMAT? AMAT is Applied Materials. Applied Materials, very solid company, very solid company. As you can see, what was it that brought our attention to AMAT? Well, as you can see, this line here is the weekly 180 moving average. If we go to the bottom, again, we have this very objective and consistent set of indicators that we apply to everything it is that we look at here. So right here we have the MACD oversold. This is typically a buy signal as it will rebound and come back up. RSI, we have the oversold. Again, this is the weekly time frame. As you can see, it touches the 30 not so often, but every time it touches, like right here, followed by significant growth. Right here, followed by significant growth. Right here, followed by significant growth. And it is currently touching it right now. At the bottom, we have the sentiment signal. Again, you want to be getting in when the sentiment is low. You want to be getting in before the hype. You want to be getting in before the headlines, right? Before the product releases. You don't want to be waking up in the morning seeing the headline from CNBC that says, oh, company so-and-so is up 50% today, and then buying after that, right? You want to be getting in beforehand and, you know, seeing that growth that those headlines have the potential of adding. So let's bring it up in TradingView. Here we are in TradingView. Again, look at the time frame. This W stands for weekly. That means every one of these candles represents 1 week of time. At the bottom, you have the RSI, which I just showed you right here. Boom. Bouncing off that 25-30, that oversold price range, and pointing up. This is a bullish indicator. Another thing we like about Applied Materials is it has a dividend. We like dividends here on the bullish side. So again, you're watching me go through all of these standard indicators that I use for every company we cover here on this channel, regardless of sector, regardless of where they are located in the world. We take a very scientific method approach, very technical focused. A lot of these stock videos do not, you don't hear me talking about news articles all that much. We are just looking at the quantitative data, these quantitative metrics that we can compare across a broad variety of products, again, regardless of sector, regardless of country. It's probably the best way to, you know, compare and contrast these potentially like or unlike things, which are investments. The dividend is 1.08%. Not massive, but, you know, it's better to have it there than not at all. We definitely appreciate that. The U.S. national average at 2 to 3%. Very nice to have it. Let's look at the more fundamental side of this company, their income statements, for example. That is one thing I liked about AMAT specifically, or Applied Materials. They offer a dividend. A lot of growth and tech companies don't offer dividends, whether it be like Shopify, for example, they don't offer a dividend. But this is a growth tech semiconductor company, and they do offer a dividend. I did value that. That does add weight to me. Example. Very, very, very solid. Very solid. In 2017, they had a profit margin of 23.62%. 2018, they had a profit margin of 18.19%. 2019, they had a profit margin of 18.52%. In 2020, they had a profit margin of 21.04%. And in 2021, they had a profit margin of 25.53%. These are huge numbers, huge numbers. We love to see it. Again, what is it when you're buying a stock or any form of asset, right? You're basically buying a legal entity that has the right to produce a specific service or good. They typically own the trademarks. They own the, the patents to produce this revenue in a very unique way, a way that their competitors cannot, right? Because they own these trademarks and these patents. So when you're buying these stocks, you definitely want to be putting your money into one that's actually profitable. Again, these stocks will represent a method of making money. You want to be purchasing one that's actually producing, not one that has a negative profit margin. So as you can see, for over 10, 15 years, this company has been using the weekly 180 moving average as a support. Bouncing here. Here, I'll put some markers in. Bouncing here, bouncing here. You were quite able to see this when we talked about it in Discord as well, using this chart, the 180, boom, being used as support. When was it that we talked about it? It was July 19th, 2022, right? So if we go to July 19th, 2022, where was this company? Right here. Since then, it has ran up over 25%, pushing through that weekly 20 moving average, and is currently up over 9% since we mentioned it in the Discord. Again, make sure you get in the Discord. It's free, available on my website. Again, guys, make sure to join the Discord. It is completely free. Finding time to sit down and make these videos for a couple hours isn't always the easiest, but I'm always available in the Discord. If you guys have any questions, you can always get a hold of me in there. And there's always things happening in there. Sometimes there's trades happening in there that just don't find the time in my day to be able to film content about them. But every day we're almost talking about a different type of investment that you guys could be making. And if you guys really want to get involved, the Discord is the best way to do it. Look at the price of SPY when we originally made this AMAT video. It was $406 when we originally made this applied materials video. Wow. It's grown a lot since then. I expect this company to continue to see growth. Again, these financials are fantastic. Look at this purple line, growing over time. Current price, $96. Our current projection for this company would show this company, again, keep in mind, we are looking at a weekly time frame, weekly candles, right? So these things don't happen overnight. They don't even happen a week from now. They might not even happen a month from now. But this is a great long-term position that you can add to a retirement portfolio or a Roth IRA, for example, and just let it grow over time. It's not something you need to wake up every morning and micromanage all these little penny flips on contracts. No. So right now we're currently projecting a gain of 182%. That would bring the price point to around $246 per share. That is very solid, very solid. Anyone would be happy with that. And because this is a weekly time frame we're looking at as compared to a monthly, this one you'd probably expect to happen sooner rather than later, probably within the next year and a half or so. As you can see, if looking at the price history, this company is known to have the... Well, here we are roughly a year and a half later, and we're able to look at how it's performed. So let's check in and see how Applied Materials has gone over 2023. Again, with us being on the precipice of entering into a new year, which is 2024, I thought it would be really interesting to look back at a lot of the trades we've made over the past 9 to 14 months and just showcase how well they have done. You know, at the end of 2022, the headlines were not great. Everyone was fear-mongering about tech layoffs, SVB's controversy, war in various countries. The headlines were not very enthusiastic about the future of 2023. But we didn't let this deter us and, get in the way of achieving our goals, right? So let's take a look at how Applied Materials performed. At a share price of $96.51 when we originally made the videos, it's now currently trading at over $162 per share. This is huge, guys. Absolutely huge. Having gained as much as 86.69%. It's just absolutely massive. That definitely outperforms the broader market, which is the S&P. It almost tripled the return that you would have received from the S&P 500 over this time frame, and it outperformed the NASDAQ as well. So adding this to a portfolio could have helped you amplify your returns to be higher than what you would have received had you just held the S&P 500. These are all really great, solid companies that we were looking at roughly, again, a year ago. And it is quite interesting to be able to see in hindsight how these projections went. Again, 2022 was a really rough year. There were not a lot of people who were confident with the outlook of the U.S. economy in this time period. There were a lot of people who were spreading a lot of doubt. They did not believe that things would work out the way that it did. But again, we saw that surprise to the upside and continued growth. And look how direct of a route this was. It's a pretty elegant upward trending price channel when you look at it, with a upward sloping resistance, upward sloping support here. Very elegant. Would have been pretty easy to hold this for an extended period of time without getting seasick or worried of how things were going to go. And I want to emphasize the market timing here. Look at when this video was made. It was right in this candle. Right in this candle right here. Let's mark that. Right in this candle was our video. And I want to emphasize this market timing, right? There is an objective, definitive means of measuring whether a fund/fund manager possesses market timing abilities. It involves running a regression over the subject portfolio's returns and comparing it to the S&P 500, for example. And there have been dozens of studies that have done this over the past couple decades, and they've all come to the conclusion that over 90% of index funds, mutual funds, and hedge funds managers and funds themselves do not possess market timing ability. So maybe you're not the most fluid in finance and you're watching this video. I just really hope you guys appreciate what it is you're witnessing here. Because it is quite rare that you see an analyst be able to possess market timing in this manner. What else can we do? We can look at the year to date. We'll go right in from when we made the video, which is represented by that thumbs up symbol. We're going to add Excel. We're going to add QQQ because it's a tech product. We're going to add the S&P 500 to show how it compared to the broader market. We're going to add SMH to show how semis did. If you just watched our video we did on semis, make sure to go check that out. SMH, probably one of the best performing sectors/subsectors of the economy throughout 2023. Extremely well. Semis did extremely well, largely driven by companies like NVIDIA, for example. So as you can see here, the S&P throughout this time frame, when we made the video, the S&P had a total return of 18.71%. QQQ had a total return of 36.27%. SMH had a total return of 65.28%, 3 times higher than the S&P and just under 2 times higher than QQQ. And then all the way at the top, we have Applied Materials producing a return of 78.06%. So by adding a company like Applied Materials to your portfolio, it could have definitely helped you amplify your returns to be higher than what you would have received had you just held the S&P 500. Really, when I'm looking at stocks and how they perform over a given time period, I really feel like the S&P 500 is kind of like the bar. If your financial advisor or your registered RIA is not outperforming the S&P 500 on an annual basis and you're paying them a fee to be managing your money, you need to find a new advisor personally. Maybe it's because I'm just very affluent in finance and analyzing these different companies, but I really feel like being able to outperform the S&P 500 is the bar, because anyone can open a brokerage account and put money into the S&P 500 and achieve that return. If you're not meeting this bar, again, they would be better off just going and investing in the S&P 500. Where you start to see advisors who actually advertise themselves as offering superior returns, whether it be a private equity firm or even some hedge funds, I feel like these types of advisors can offer an immense amount of value to their clients by significantly outperforming the market by an average of multiples, like 2 times better, 3 times better, while being substantially more diverse, both nationally and internationally. I feel like everyone should be seeking and potentially working with a good private equity management firm or even hedge funds. You should definitely be seeking this. This is something that's extremely valuable to you. True passive income is having employees, right? And a type of employee that everyone, regardless of whether they're a multi-billion-dollar net worth individual or someone who makes $40,000 a year, every single person in between can work with a adequate financial advisor who can employ a financial advisor who has a proven track record of consistently outperforming the market. And that's probably one of the best things you can do. A lot of the fees that financial advisors take are write-offs against the taxes on the income they're directly making you in return. So it's money that would have went to taxes anyways. I feel every individual should be seeking this type of advisorship. And again, they'd be doing all the work for you. Your money would literally be working for you. You wouldn't have to manage it yourself. You wouldn't have to attempt to be a day trader. Nobody wants to be a day trader, right? Nobody wants to be a day trader. This took roughly a year to occur. So many people have this idea that they're just going to wake up one morning, put their money into this super high risk investment, and then they're instantly just going to be a millionaire. And that's just not the case. That's not how you make money in the stock market. It's just not. Looking at these quality companies that can grow consistently and regularly for long stretches of time, whether it be 6 months, a year, 5 years, with you only needing to put one input in for a buy and one input in for a sell years down the line, this is a desirable trait. The longer something can be in a state of growth, the better for everyone, whether you are a financial advisor building portfolio sleeves or you're again working a 9 to 5, you have an extra $100 to $200 a month that you'd like to use to plan for your future. Both of these individuals, it is in their best benefit to be allocating it into something that will grow consistently and for long stretches of time. That doesn't need to be managed every day. You don't want to be a trader, you want to be an investor. And last, we did comment again, the SMH, which is the semiconductor fund, did extremely well this past year, and it makes sense for its underlyings to also be doing extremely well. When an index moves a little bit, the underlyings can move a lot. So it's important to take note and potentially strategize how you're going to be scaling into these moves. Whether you, let's put the SMH in here. Whether you bought one of the underlyings represented by the semiconductor sector, whether you bought one of the underlyings represented by the semiconductor sector, such as Applied Materials, NVIDIA, whether you decided to just buy the sectoral ETF, being SMH, whether you decided to buy a leveraged variant of the product, or whether you decided to get QQQ, which has a little bit of exposure to semis in there, but that's not really its primary focus. These are all different approaches to scaling into the same trade. You're all on the same team and you're all playing in the same field, going the same direction. Just because your friend Johnny wanted to buy an options contract and go long on Applied Materials and you bought shares, this is not to discredit one person or the other, right? You're all going in the same direction. And to that note, let's look over here. You know, on this channel, I'm a huge fan of leveraged ETFs and different leveraged products. We talk about them all the time. We recognize they exist for various sectors, various different products, various different indexes. We talk about them all the time. We love leveraged products. So throughout this time period, I did mention this in our SMH semiconductor video. Throughout this time, had you chosen to scale into the semiconductor 3x leveraged ETF, you could have experienced a year-to-date return of 213%, while the S&P only had a year-to-date return of 24.89%. Had you bet against semiconductors with a bear 3x leveraged ETF, you would have been down as much as 83.69%. This is the XLK 3x leverage ETF, the Technology General sectoral ETF. It gained as much as 195%, and then the 3x QQQ leveraged ETF gained 185%. And again, it just shows that semiconductors did extremely well throughout the year. You could have opted for SMH being the semiconductor fund. You could have opted for the leveraged semiconductor fund. You could have opted for companies underlying in that. Again, these are all great choices that you could have made to basically scale into this same trade that we're all making together. And anyone who showed support for semiconductors or applied materials throughout this time frame, I'm really appreciative. We all benefited immensely throughout this time period. I think it's hard to say 2023 was anything other than an amazing year for equities. I might try and pull it up, but I think if you look at the year-to-date return on QQQ, it's the NASDAQ just had one of the best years that it's had in over a decade. So that's an interesting fun fact. Its rate of return on an annualized basis was better than it's been over the past 10 plus years. So technology did extremely well. I think that's everything we need to say about Applied Materials. We'll move into our next company now.